Guys, welcome to my YouTube channel. This is Abiola right here on the Traders Journal. For this week is another episode where I'll be sharing with you the trades I took, why I took these trades, and the strategies that has been helping me to hit this TP like the one you're seeing on the screen right now. So please and please, I want to beg you, if you know that you get value for this video at the end of the time you spent on this video, please make sure you subscribe button and like this video to help a lot of other new upcoming traders to get this information that I'm about to share in this video. Welcome back. So this is it, right? This Sunday, Sunday morning, Sunday afternoon, and this trade I was able to take it when I was studying in the night. So I saw that market took out this low here and then went directly from this low to create a break of structure or a change of character to the upside, right? And it's break it with a very good momentum. This momentum here is to show you that the buyers are in control. So, and market came back to this level. When I saw it, I was like, I'm going to take a bet on it because it's my strategy, it's my trade, right? And for me to first enter, for me to take this entry, right, I saw this green candle, and if you go to lower time frame, like 15 minutes time frame, you see that this thing literally shows you what is to call it, shows you where are you? If you go to this time frame, you literally see that market gave us a double bottom right here. So definitely seeing this kind of confirmation and having a double bottom here is a good sign for an entry. So the buy, I took the buy and I went to sleep. It was already this was already like 12 o'clock here, and I have a lot of activities I do after that time, so I just went to do what I want to do and take my sleep after I set my TP and SL. How for me to wake up on Monday morning, like in the morning, and see that market smashed our TP and instantly started dropping, and on Monday we saw a really strong drop to the downside on Monday that I was contemplating whether market is still going to break that level, because there's a level on daily time frame. If market break that level and close below it for that day, then we're going to have a lot of selling pressure in the market for this week. But unfortunately, market couldn't close below it, and the second day the same day it's break to this level. So that was the trade on Monday, right? Even though I saw these movements, just one trade per day is okay. One trade per day, even say if I can say it's in one session, but I'm not really taking sessions. I'm taking strategy. And once I see the strategy, whichever session that the strategy is playing out, I'm entering it. That's just the truth. That's just how I trade it. So on Tuesday, this trade right here, this is actually a trade for me, but I couldn't take this trade, right? I couldn't take this trade after this inducement level. I couldn't take this trade. Wish I took it that day, but it would have given me my 5 risk to reward ratio ASAP, because I wasn't even waiting. When I saw this one here, I wasn't waiting for much, but I didn't take the trade. I took it. So literally on Tuesday I didn't take any trade. But for educational sake, let me share with you this strategy that you're seeing right here. So here is my line. Here's my line. So right here, market break structures and then form inducements. This place becomes inducement. If there is any other block here, then you can enter that other block and see market break structure to the upside. But one thing with this entry model is that it's not going to break structure immediately. It's not just going to go up straight. It doesn't just straight like this. It will keep moving on the side till it smash your TP, which is exactly what you see here. So here is how to use this strategy. Make sure that the trend of the market, you're able to identify the trend. Okay, the trend is uptrend, the trend is downtrend. So once you identify the trend, and let's say for example markets kept moving up, and market just break a particular zone around here with a order block. This order block here, you can easily see it on what is to call it, on 1 hour time frame, right? If you go to 1 hour time frame of your chart, you'll be able to see the order block. But the thing is that before you trade it, you must see inducement, either engineered liquidity or inducement or liquidity on this level. So something like this that you are seeing right here, something like this that you are seeing, so that is just your entry will now be on the order block. You know that sometimes you say, okay, order block is here. Some people will say this is order block, but if you go to 1 hour time frame, you will see that order block actually started from here. Order block started from here. So you want to make your entry to be on this level, while your SL be below this particular level here. So that is that on that. So because I didn't take the trade because I was literally waiting to see if market is going to give me more opportunities and more confirmations to enter. So on Tuesday, oh, not on Tuesday, on Wednesday, I was able to catch this trade. If you remember what I told you, I said that same strategy that I used in this particular explanation I just did was the same strategy I used here. But the difference between this one is that there is engineered liquidity. Now watch me explain what engineered liquidity is to you. Okay, so this is order block right here. This is order block that range from here to here. But the thing is that you can see that this particular place is a liquidity level, because a lot of people that enter buy here will be putting their stop loss right below this level. People that enter buy here will be putting their stop loss right below this level. So wherever people's stop loss are, that's where liquidity will be. So when I spot these liquidities here, then market started moving up. I was like, if market is not going to come back to this order block, I'm not going to take the trade. I was literally sitting where markets created this inducement. I wanted to be going up, started dropping. When I saw this inducement, I was like, okay, market is creating engineered liquidity. Engineered liquidity is when market has grabbed liquidity, but the liquidity that market grabbed is not enough. So before market goes up, it will create more room to grab liquidity. This is how engineered liquidity look like graphically. Engineered liquidity, market is going up here, then coming down. For market to go up again, it came down to pick this low. But before picking this entry, this order block or demand level in this level, it created engineered liquidity to go back, then tap it, then go up. Do you get? So this one is like this. This is like. So a lot of people that trade double top, double bottom, all those things, they will think, okay, this one is break of structure, then retracement, then run down. But no, it's engineered liquidity. So a lot of people that trade head and shoulder, double top, their entry will have been here to sell, whereas markets will just come here and use their SL here to push the market to the upside. So this here is engineered liquidity, and that's what I saw here. And confirming it is double bottom. Remember, we are not trading double bottom, we are trading liquidity. We are trading in opposite liquidity. Wherever liquidity is, once market get there and give us a pattern showing us that market has grabbed liquidity, then we take the trade. And this trade gave me about how many risk to reward ratio? 9 risk to reward ratio. On this trade alone, on my profile account, it gave me about $120 something on it. So I think on one video I'll be explaining and showing you this profile account that I'm trading. So when you see engineered liquidity, try to understand, once market is in uptrend, don't be looking for opportunity to sell, just look for opportunity to buy, and that makes you to escape all this engineered liquidity effect where market will form a double top. So because you are selling an uptrend, you are trapped into it, and the market gets to a level couldn't even give you like 2 risk to reward ratio, and then start moving against you in the trade. So try to avoid trading against the trend, and I believe you're going to make profit. Yeah. So here, right here, this is my trade on Thursday. This is my trade on Thursday. So why did I decide to sell when market is literally creating an opportunity to buy? Why did I sell? Okay, I sold because I'm seeing a fair value gap here. I'm seeing FEG here. So between this level, if you go to 1 hour time frame, you see that there's something like FEG here. So this FEG was what I saw, and I was like, markets literally came to this level and rejected. Do you get? So you see what I'm saying, right? So market got to that level and rejected it. So I was like, okay, maybe market is about to go down a bit, and this level here is a demand level. This is a demand level right here. So there's possibility that market is going to come back to this demand level. So when I saw it, I was okay. But the thing is that because I don't trade against the trend, so it just gives me this fear that I'm not following my plan of not trading against the trend. So even when I was holding the market and market came to this level and was moving with this momentum that you're seeing in this chart, I was like, this trade is stressing me, so it's making me psychological, it's affecting me psychologically. So I decided to opt out of this trade. And I didn't opt out of it in loss. I opt out of it in this green candle when I was seeing this green candle here. When I was seeing this green candle after this red move to the downside, the market is still giving me green candle again. So I opt out of the trade. And all for me to go out and come back in, I literally see that market has smashed my profit, but I can only close with, I think, roughly about $9 to $10 that day. So on Thursday, I literally take no trade on Thursday. That's how I spend the whole day, just feeling bad because I opt out of the trade. But there's no need to feel bad in trading, because trading is just like looking for carb in a place where carb move very well. So opportunity will always come. There will always be space for you to take your entry, for you to take your trade, another opportunity all the time. So there's no need to be feeling bad about a missed opportunity or opportunity that could have given you money, but you're able to manage your risk and get out of the trade in no time. So it's better that way. Don't ever feel bad about your trade. It's actually a part that I have to work on. Even though I'm profitable, I still have to work on my psychology constantly. So on Friday we couldn't get any trade, even though I saw this on one good signal channel that I'm in. The person made a signal call that they should buy BTC, but I don't like following people's signal. On Friday we were not able to take any trade on BTC. I decided to check GBPUSD. Okay. So here is the trade, right? Here is the trade I took on GBPUSD. And why did I take this trade? I started seeing this place right here to be engineering liquidity, and coupled with the fact that market took out this low here and then moved to the other side. So instead of me to work with a particular this thing here, because this is also another trade for us. Let me show you something. So here is it. Market stopped this low because this is a low. It creates new high here. Market stopped out this low, then create a new structure, a break of structure to the upside. So here is it. So this low, this high. Market took out this low with a week, then create a break of structure. So this break of structure is still valid. Then we need inducement, which is this inducement. So markets had to come back to this level here, but none of those things have come back to that level. So market literally came back to that level, then went up like this. This will have given us our 5 risk to reward ratio that we are looking for very fast, but unfortunately we're not able to see it. Literally saying, okay, market came to this level, broke this structure to the downside, then took out liquidity, right? Then create a break of structure to the upside. Then I believe that after this engineered liquidity, market should come back to this level to tap us in, right, based on this particular this thing. But unfortunately, market didn't tap us into anywhere. Our ISL was taken out, and that was how we closed Friday. So guys, that's how my week went on my trading journal for the week. So please, if you get value from all this free information I'm sharing on this channel, please do well to subscribe and like this video. See you in the next video.